All right, my friends, it is 7 p.m. Eastern. Just going through my daily and weekly kind of weekend recap of Evernote. And, I know I've been talking about this a lot, but I just see a lot of people really struggling to keep up with the flow of information. A book I recommended last week. Hopefully, all of you read it this week. I wrapped it up a few days ago, building a second brain. But anyway, 2 months, that's all that's left. 60 days, they'll decide whether this year was growth or just another blur. This isn't the time to slow down. It's the time to lock in. You've been through all the distractions, the self-doubt, the lazy faces. Now finish what you started. Forget perfect plans. Show up every damn day. The world won't remember the times you almost tried. It'll remember the stretch where you refuse to quit. So cut the noise, tighten the focus, and give last week's everything you got, because how you end the year says a lot about how you'll start the next. So give it everything. No breaks, no pity, no BS. I keep it PG. 2 months, one mission, run it hard. So that being said, let's get started. Let me get over to the agenda. Where is it? Too many tabs. Kind of recapping the last week. Another great week for earnings. Microsoft, Amazon, Meta all beat expectations. Obviously, Microsoft and Meta stock price didn't react as much as you like, but they're spending a lot of money, burning a lot of cash. I still love Microsoft and Meta long term. Look for breaks of basically the pre-earnings announcement level. So what you look for, it's not that traditional week open red to green. A traditional week open red to green would be based on the previous day's 4 p.m. close. But I want you to think about it conceptually that way. Look at, and this applies to Microsoft and Meta. Obviously, Amazon crushed it, Google crushed it, Apple, different story. But when it comes to Microsoft and Meta, track that price right before earnings dropped and then the sell-off came. You get a retest of that level, going to be a great buy, and it's going to take time. Like, this is kind of a bigger picture idea. We mostly focus on short term here, day and swing trading. The Microsoft and Meta idea, way bigger picture, maybe longer timeline than a lot of you care. But that being said, if you like Microsoft and Meta, just look for those levels. Apple, again, the numbers weren't as great as everyone expected, but the stock price, love it. Alphabet, again, great reaction as well. And the S&P 500 closed just under record highs, but we do have a gap up right now on futures. We're 0.3% green, not a massive move, but as we often talk about on Sunday nights, we always love to see those green opens on futures. And then a couple links for you. I won't play them because I think if I play these, I'll get yanked off of YouTube. But a couple links that I want to give you access to in the chat. The problem is it's a CNN clip and it's a Fox clip. So I think if I play them, I will get yanked off of YouTube. But Scott Bessent on rare earths. Huge. I have such a massive fanboy man crush on Scott Bessent. But anyway, he mentions China's been putting a rare earth plane together for 25 years. U.S. has been asleep. So the reason I'm giving you this clip is going back to last week. We talked about the, if you were here last week, this rare earth idea, basically thanks to our terrible politicians, they basically handed all of the rare earth processing to China, which gave them that edge. We literally gave them that edge. That is over. So now completely changing. And as Scott Bessent says, you're not bullish rare earth enough, especially when it comes to the U.S. Rare earth plays. Again, that's just kind of a recap of last week. And then another kind of going back to last week that I won't play. This really goes back to pretty much every week on the Sunday night live stream, talking about basically Jensen Huang. You guys know, another man crush of mine. CEO of NVIDIA. When President Trump took office, he wanted us to manufacture these critical technologies onshore within 9 months. And again, and it was funny, I even saw it in the comments last week. People are like, oh, you can't manufacture semiconductors in the US. Whoops. Did you guys see the double bird? Wait, where is it? Yeah, okay, cool. I thought the double, I like automatically did the double bird, the Michigan salute, as they say. Those of you that are familiar with, you can Google the Michigan salute. I don't think it made it on camera. Okay, so I maintained my PG rating. But anyway, even last week, people are like, you can't manufacture AI chips or it can't be done in the US. Going back a year. All it takes is the willingness to do it. And as Jensen Huang says, within 9 months, we've been able to manufacture the most advanced AI chip in the world, completely in the United States, in Arizona. And all it took was the willingness to do that. So again, semiconductors, AI plays, just going to explode. We're, so much opportunity in both of those sectors. So watch both of those as well. Let me get back to the agenda. And AI still carry on market. Okay. We're starting to see who's executing and who's just talking. So we're starting to see, the Googles and the NVIDIAs outpace a lot of the other plays. The speculative plays have started to slow down, but listen, we had an amazing run on all of the very speculative AI quantum plays. And now we're starting to see a flight to quality. Now, what I think what will happen, the speculative plays will kind of slow down for a little bit. The flight to quality will continue to happen. You guys know I talked about Google a lot as a swing trade. Iris actually loved Google post earnings. And then what's going to happen is you'll kind of see that kind of sideways consolidation in a lot of the lower priced, more speculative plays. Then someone will announce something, whether it be NVIDIA, AMD, et cetera. And then we'll have another, speculative AI and quantum run. Now, the nice thing is just run your scans. I mean, like when people are always asking, how do you know when these hot sectors are emerging? Just run scans. I mean, I'm looking at the weekend scan and, you've got Amazon on there, Apple, Palantir, funny enough, HKD and AMTD. Remember, HKD and AMTD trade together, only day trades. But Cloudflare's on here. Like, it's not hard to figure out what the theme is. Like, what I would say is don't depend on outside sources. Let your scan tell you where the money's flowing. And again, Palantir, another Iris trade, was first to swing trade at $26 a share. I talked to you guys all the way through that, literally for about 2 years, to 100 to 200 as recently as as when Citron went short a few months ago. Everyone was saying it was over for Palantir. I'm like, Citron is trying to guess the top, buy it. You can literally see on the chart where Citron got bagged on Palantir, like in the 160s. Like the stock was selling off, is the crazy thing. Palantir actually looked like it was starting to reverse. And then Citron and Andrew left, and all these other people start trying to guess the top. And then guess what? 160 to 200. And now at this point, I think 300. Now it's probably going to take a year for Palantir to get there, but I think 300's incoming. Warner Brothers, WBD. That was another idea I shared on Schwab TV a couple weeks ago. They're probably going to get bought out any day, but again, you can literally see these plays simply by running scans and looking for chart patterns and sectors. I saw a great quote the other day, or it was actually a video with Stanley Druckenmiller. Hopefully all of you guys have studied Stanley Druckenmiller and you're familiar. Like he talked about this. I saved the link. I got it somewhere. But he talked about the fact that he never and again, all of you guys should know Stanley Druckenmiller, but if you don't, Google him, hell, leave this video and study Stanley Druckenmiller. But the point is, he said he would always be looking for these emerging trends simply through charts, through technical analysis. He barely even read the news, Like, you don't need to. If you're looking at charts to your eyes bleed, as I say, you'll always know what the trends are, and you don't have to worry about having to ask somebody else or try and figure out what's hot right now, because you'll know weeks in advance, because these stocks start hitting all of these scans before everyone starts talking about them. Then you get the media coverage, the Twitter coverage, etc., which then creates the second leg. So AI, again, I've said this pretty much every week. Everyone's calling it a bubble. My quote is, whenever you see that, a bubble is just a bull market that you're not participating in. It's all people that miss the move, that refuse to get long these stocks, and it's just sour grapes, so they call it a bubble. The stock of the week is, hopefully all of you guys have the watch list. Let me get this out of the way here. Get my windows arranged, and I will link you to the watch list. And it is right there. And so GSAT, again, look at that power move. Whoops, I'm not sharing my screen. Let me share my screen. Oops, not that one. Let's do this one. There we go. So GSAT, power move right into the close on Friday. Big gap up. On Thursday. On Thursday, big power move, then held that level, actually did a beautiful week open red to green. So I want to touch on GSAT for two reasons. Kind of the Friday idea and the week open red to green pattern. So you've got that kind of move just out of the blue, 40 to 55. I mean, odds are you're not going to catch that move. I mean, it's just violent to the upside. The odds of seeing that in time to actually trade it, pretty low, very low, probably zero. Now, maybe you catch it. Now, the way we like to approach these, when these stocks run strong into the close and then close at or around the high of the day, that's where the week open red to green pattern comes in. And you can see GSAT gap down, but didn't gap down a ton. Gap down from basically 50.85 to 49. Not a massive gap down. So that's the key. We don't want a morning panic. You want a slight gap down, but still maintain near the previous day's close. Then you look to enter when that stock continues into the second day, which is that red to green move, basically 50.80. And then the way you risk on these trades, because as real traders, we always think about our risk, never enter a trade without always thinking about our downside. Every trade that I enter, before I even enter, I always look for a level on the chart that gives me a smart stop loss. And that is determined before entry. Now, what most do, most people that struggle, all they care about is the entry. That's all they care about. They never think about, what if this trade goes against me? What's my downside? Now, in the instance of a GSAT, you have that downside determined because it gaps down, holds that level, and then grinds higher to the red to green. So now your entry is the red to green move, never went back red on the day, and then you've got a smart stop loss there. Then you can see this stock just continued all the way to Friday at 4 p.m., closed at or around the high of the day. So now we use that exact same pattern going into tomorrow. So now and this is the kind of the feature stock from the watch list. Love this one. So now we're looking for a repeat move of Friday morning. Slight gap down, basically a hold in the morning, and then a red to green test with risk on that gap down level. So let me get my notes here. GSAT WARG for Monday morning. Now, let's talk contingencies. What if it gaps down and never goes back green on the day? You ignore it. If it gaps up, so your other scenarios are, let's talk other scenarios. One, gaps down and never goes green equals ignore. Other contingency, gaps up, simply repeat the same plan on Tuesday. So we've got three potential scenarios here. One is GSAT gaps down and never goes back green. That's an ignore. Number two is gaps up out of the gate. Then we simply wait for the exact same pattern on Tuesday, Wednesday, Thursday, Friday. Then an entry is triggered if it replicates a similar move to Friday morning, gaps down, goes back green. You then enter on the red to green move and risk that morning low. So I've had a lot of people asking about the week open red to green pattern. Very simple. Simple is good. Many people way overcomplicate things. It's just, and I just like it because it really fits the idea of, you know, the way that I trade and the way that I teach. We use a very systematic approach. I always think of it kind of like conditional operators. Now, you know, not to get too geeky, I'm sure many of you are familiar with conditional operators, but if you notice every trade plan and every setup that we go over, it's kind of like an if, then, else statement. If this happens, then. Else, then. You've basically, like if you go back over what I just went over on GSAT, you have a decision tree in essence, right? Actually, let me know if you guys are like, do you see how you have a do you guys know what a decision tree is? Give me a yes or no if that makes sense. So now think of it like putting it on a whiteboard for and listen, you may like GSAT, you might hate GSAT. I don't really care. Like you might be like, Tim, this stock sucks. I got no interest in it. That's fine. But the point is, what I want to go over is the way that I think all of you should approach trading, because so many of you are just making random trades all day long. Random chasing, random entries, trading with no stop losses, trading with no profit targets, etc. So now, if you think about what I just went over on GSAT, you could literally look at that on a whiteboard, have the chart over here, and have every single potential contingency laid out for you. Gaps up, wait for the next day. Gaps down, doesn't go green, ignore it. Gaps down slightly, holds and goes green, trade with your risk set on the morning lows. And then you can just kind of repeat that setup over and over again. So GSAT only becomes a trade if it follows the pattern. If it doesn't follow the pattern, it's just an if then else statement. And then you get to the end and there's no action. Now, I know a lot of people hate that because, you know, and I know I talk about this a lot in the last couple of weeks, you know, so many people, like it's just action. Like they just want to always be trading something, always be in something. And I struggle with this every day with so many people. And it is truly the most challenging part of the mentoring that I do, of just trying to get people to the point where it's like they actually following a plan and a pattern versus just always like, what can I trade now? What can I get in now? Like, listen, sometimes there isn't anything. Like sometimes, but people will show up to the market and literally just be like, what is there? What can I buy right now? I got 10 minutes. Like I'm on my bathroom break. What can I buy right now? That is not the way any consistently profitable trader approaches the market. You wait for the opportunity to come to you. Hopefully you're at your station. Hopefully you catch that opportunity. But if you go chasing trades, like just trying to get the market to give you something, it's going to end really badly. You have, and this is where so many of you have heard like these sniper analogies. This is where the sniper analogy comes in. Like, think about this. If you're a sniper, you're sitting there, at the top of the hill, and you're waiting for a very specific target. Like, you got your shoot list with the guy's face on there, what vehicle he drives, etc. And you only take that shot if that target appears. Now, what so many new traders struggle, or not struggle, they just choose not to trade professionally. Like, it's just spray and pray. Like, there's a sniper up there and just some guy walks out and they shoot him. Like, it could be the chauffeur, it could be the housekeeper, it could be a security guy. Like, they don't wait for that specific target because they're trigger happy. And now they're just in stuff all day long. So what's great about the week open red to green is simply waiting for that setup to appear. Again, some of you guys saying you don't have the watch list, just sign up. I don't know. Check your spam folder. It's like every week it comes up. I don't know. Sign up for it. Check your spam folder. I don't know. So I received an offer from GPUS to exchange my preferred stock for common stock. What should I do? Jonathan, are you green on the trade or are you red on the trade? I'll wait for an answer. Jonathan, are you invested in GPUS or did you buy this stock as a day trade and now you're in it days later? What was your plan on GPUS? Was your plan for it to be a day trade? So you invested in GPUS? Like a 50-cent stock? 40-cent stock? Oh. Well, sounds like an excuse. So, Jonathan, listen, this is where people hate me. This is where they hate me. It's an excuse, Jonathan. It's an excuse. Your internet went out. Listen, bad things happen. Your internet goes down. Your platform crashes. Your broker won't let you log in. I mean, I don't know. I say sell it as soon as you can tomorrow. That's what I say. Like, and this is a very recurring theme. I know. And it's where everybody hates me. Tim's such a dick, If you are ever blaming anyone else other than you for still being in a penny stock, major red flag. Major red flag, And I'm not, listen, I'm not saying you're making it up. Every day, I see people continue to let poor decisions or poor trades just drag on and on and on. What day did you buy GPUS? And Jonathan, I'm not picking on you. I want to help. What day did you buy GPUS? What was the date? The calendar date. 2 weeks ago. What I would have done is as soon as your internet came back on, I would have sold it. It's a terrible, disgusting, crappy penny stock. And if you're red in a trade, like, listen, 2 weeks ago, you could have gotten your buying power back. Okay. I'm guessing you have your buying power locked up in this stock. You have probably spent hours and hours and hours looking at this stock, watching it, hoping something will happen. Nothing has happened in 2 weeks. It's gone up a couple times and then slammed back. So I don't know, man. Like, but the biggest red flag to me is using an excuse. You chose to stay in it. Okay. So what I would do, sell it tomorrow, you know, and if it runs, so be it. But like somebody said, rip the Band-Aid off, you know, just get it over with. The sooner you move on, the better it is. So, so we went over GSAT, other stocks on the watch list. We got Kaba. So Kaba had a nice strong day. By the way, thank you to a lot of the members in DIT at noon. This one, Kaba kind of flew under my radar because the volume and the float pretty high and the volume was kind of low. So I didn't even see Kaba because it really didn't hit my scans. But a bunch of you brought it up on the double down at noon. Man, beautiful trade. Just a nice grind into the close. And for sure, so going back to week open red to green, Kaba 100%. Actually, let me share my screen again. No, we're not going to go over the RCT again. No. No. I am sorry. Okay? Like Stock Trader 123, I love you. I wish you all the best. No. So back to Kaba. Nice all-day grind. And again, thank you to a bunch of people that brought this up on the noon webinar. And definitely a week open red to green with that close. Also, nice breakout on the 2-month as well as the daily. And CSIQ, very strong chart. Also, week open red to green. And then HKD. So HKD, what I like about this one is notice, speaking of RCT, it did do an RCT in pre, was the best runner of the day on Friday. But what I love about HKD is notice it never broke the first RCT. So when we see that, that's something you always want to pay attention. And you can see the RCT denoted by the purple lines on my chart. It's that first red candle after the parabolic move. Here I am talking about the RCT after I wouldn't. But anyway, the point is, notice how when it sold off about 3 o'clock, never violated the RCT, maintained it. Sold off into the 8 p.m. close, also never violated the RCT and maintained it. So I think that this very solid potential. So as long as this stays above basically that 250 level, I think we could for sure see a day 3 surge on this one. Now, if it breaks the RCT, forget it, scratch it, kick it to the curb. But the longer HKD stays above that original RCT, the better the potential for that second leg. And then the other one, RANI, nice break of the triple top into after hours about 4:45, and then closed very strong into 8 p.m. Now, what I don't like about RANI, a lot of kind of overhead resistance on this one. but another solid one. If this can stay above that lower support level of 240, I think you can definitely see lifts off of that. So, yeah, Kaba, that's the reason I brought up Kaba, is because, you know, when you got those stocks hitting multiple algos and AIs, and also when anytime I see Iris liking low price stocks. So remember, Iris is a swing trade AI, and it's basically programmed to hate penny stocks. Okay. Like the idea with swing trading is we never swing trade penny stocks. Like, just if you're holding penny stocks long term, prepare, you know, be ready to hate your life every single day. But every now and then, now it's rare, but every now and then, Iris does like these $3-4 stocks, and a lot of them end up being UAMY. Now, a lot of you guys remember me talking about UAMY a few weeks ago. I totally botched. The crazy thing is, I totally botched this trade. You know, I sold like right here, okay, because it was 100% swing trade from Iris. You know, this was one. It was a $3-4 stock back in the spring. Iris liked it. I bought it. I was like, whoa, hey man, Iris likes this $3-4 stock. This was back in April. And then a few weeks ago, it like ran to like 6 or 7. I was like, holy crap, 100% swing trade. I sold. A week later, it was at 19. Completely botched it. Okay. Totally botched it. I mean, it's kind of embarrassing. A 100% win was a botch job. You never go broke taking profits. But stocks like UAMY as well as Kaba that Iris likes, a lot of the times they make moves like this, you know, $3-4 to 19. Now, again, I sold in like the 6s and the 7s, but hey, whatever. So, that being said, let me jump back to the agenda. So yeah, anyway, watch list is Kaba, CSIQ, GSAT, HKD, and RANI. Just kind of recapping the week on earnings. We had Microsoft and Amazon showed that AI infrastructure demand still scaling up. Apple and Tesla were still bullish post earnings, not as big a moves though. But I think this is what Apple needs to do. They just need to buy somebody. Apple's sitting on so much cash. They can't figure out AI. Just buy Perplexity, buy one of these guys. Like Tim Cook, get out your freaking wallet. Tim Cook's sitting on so much moldy money. Just go out and buy an AI play instead of trying to do it in-house. I still can't get, like, all I can basically use Siri for is like to add something to my to-do list. So anyway, keep an eye out for that. Not only as acquisition targets, but if Tim Cook ever gets his moldy money out, buys a real AI play, they bundle that into iOS, I think Apple could be one of the biggest AI plays. They need to quit trying to do it in-house. So looking for follow through this week on Nvidia, Amazon, and Microsoft. And then let me just go through. I think that's about everything. Any questions, guys? Do you like LGCL? Let me take a look. Hit me with questions, guys. I think I got pretty much. I wanted to focus on the week open red to green pattern tonight. So LGCL, let me bring up the chart here. Man, just so much overhead resistance on this guy. I mean, look at it. Big gap down here back in September. So the problem with LGCL is you just got, I mean, look at these two hellacious gap downs. You got a massive gap down in July from 40 to 22, 50% gap down in July. Then you got all these people that didn't sell there. And then you get a hellacious gap down from 20 to 6, and then just a all 2-month fade into oblivion. So, man, you just got so many bag holders in this. Now, what I do like, micro float. What I hate, Chinese stock. Man, it's just so much overhead on this. Now, this is what I would say. It's sketchy China, so it should only be a day trade. Okay. Considering it's a Chinese stock and those brutal gap downs, please only day trade this thing. So I guess my kind of synopsis would be, if it hits Oracle, trade the signal. If it hits Flux, trade the signal. And please, 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 please only day trade this stock. So, is the split on Netflix bullish? I think so. Yeah. So remember the idea with a split on a stock like Netflix. You know, think of all the people that are bullish Netflix. I mean, I don't blame them. But think of all the people that simply can't trade Netflix if they wanted to. Think about it. It's $1,000 stock. Okay. So typically when they split, it's bullish because now it makes the stock affordable to people that want to invest or trade this stock, but simply can't because it's $1,100 a share. So the way we approach these is, I don't buy pre-split. Okay. Wait for the split and then look for our patterns. I mean, that's approach it from a techno fundamental approach. Wait for the catalyst to occur, much like with earnings. Don't play guessing games into potential catalysts. Let the split happen and then look for dip and rips and Oracle signals and red to greens and break a previous day's highs and all the patterns that we trade. But the short answer is typically splits on these really expensive stocks are bullish because it simply makes it accessible to people who have wanted to either trade or invest in Netflix and simply can't because, every share is $1,000. So thoughts on Palantir? Already talked about Palantir. Coma Dog. That's kind of a big question. Thoughts on Stargate, Rare Earths, America First Plays. I've got a bunch of watch lists. I've got Coma Dog. I'm butchering your name. Great question. But I mean, you can call this a cop-out. I just don't have the time. We're pretty much wrapping up here. But I'll say this. I've got a research report coming out next week. Subscribe to the watch list. Like I talk about this stuff every day. But the short answer is very bullish Stargate, very bullish U.S. rare earth plays, and any of these companies that are bringing manufacturing back to the U.S., they're all buys, man. Because here's the thing. What you're seeing, like Intel, okay, you're seeing the U.S. government take stakes, investment stakes in these companies that are bringing manufacturing back to the U.S., which I love. And think about it. If you have the U.S. government investing in a company, well, look at Intel. I mean, all you got to do is go back and look at Intel. The day that the U.S. government took a stake in Intel, it's up it's up 50% since then. So that's what you want to look for. You want to look for these onshoring companies that have U.S. government stakes. They're all kind of longer term ideas, not really day or swing trades, kind of more long-term investments, but that's what you want to look for. So, Beyond Meat is beyond dead. Listen, guys, we had an amazing run with Beyond Meat. Like you had about as best case scenario as you could get on BYND. Gaps up on news, followed through the next day, broke through so many levels, and was like for 3 days was absolutely incredible from a day trading perspective. But it's over. It's over. You know, if you missed it, so be it. You know, listen, if you missed the Beyond Meat run, there's nothing wrong with that. There'll be another one. There'll be another one. But it's over. It's over. You know, it came and it went. It's like the tree falling in the forest. And, you know, and I understand this. A lot of people are like, damn it, I missed it. Damn it, damn it, damn it. Guys, we have these types of moves every day. I mean, look at HK. Like, here's the thing. Look at HKD on Friday. Okay? Like, it was just as good as Beyond Meat. I mean, literally every day we have these scenarios play out. So, like, it's almost like people think of trades. It's like Al Bundy. It's like Al Bundy, 30 years later, he's still talking about scoring 3 touchdowns and taking home the prom queen. Like, it's over. Okay? Beyond Meat is over. And it's the cycle of penny stocks. I mean, look at HKD on Friday. It hit the Oracle signal at $2.96 and went to over $5 in one day. That's exactly the type of moves that Beyond Meat did. Now, tomorrow there's going to be another one. Tomorrow morning there's going to be an RCT, which HKD was an RCT in pre. Okay? Like, and then Tuesday there's going to be another one. And Wednesday is going to be another one. And Thursdays there's going to be another one. And instead of fixating on what happened, instead of fixating on what happened in the past, you should be looking forward. You know, I see this mindset of people that just lock in. Oh, I wish I would have done this. I wish, like, instead of thinking about the past, I mean, you can't do anything about it. Okay. But what you can do is, you know, from 7 to 9 a.m., look for an RCT. Then after the market open, trade the Oracle signals. In the afternoon, trade the Flux signals. Into the market close, swing trade IRIS stocks. Like, all of the patterns that are in my ebook, they happen literally every day. The great thing about the stock market is every single day there is a new opportunity. So instead of talking about Beyond Meat from 2 weeks ago and wishing you would have caught it, well, you could have traded HKD yet on Friday, and tomorrow there's going to be another stock just like this that matches all the criteria. Low float, catalyst, you know, unusual volume, you know, all of those box checkers. Now, that doesn't guarantee it will be a winner. That's why we always stick to stop losses. That's why we always have a trade plan. Now, tomorrow morning, there might be a total box checker that follows the pattern and fails. And then you cut it for I don't know the size of your account. Maybe you lose $50, maybe you lose $100, whatever. But then tomorrow then Tuesday, there's going to be another box checker that follows the pattern and goes up 85% like HKD did. And then you make back everything that you lost on Monday, then some. And that's how the rule of 5 plays out. The whole point of the rule of 5 is staying in cash and staying agile. The whole point of the rule of 5, cutting losses small, not being a bag holder, The whole point of the rule of 5 is understanding if you cut your losses quickly, you can easily make back what you lost. But if you stay in trades that aren't working, now you have to hit a home run simply to get back to break even. So the rule of 5 dictates. I was only planning on 15 minutes tonight. We're almost, but so I will leave you with the rule of 5, my friends. It's a thought experiment, but I want you to take this to heart. Let's assume you trade once a day for 5 straight days. Monday, you lose $100 following the patterns. Tuesday, you lose $100 following the patterns. Wednesday, you lose $100 following the patterns. And then Thursday, you lose $100 following the patterns. You are 0 for 4 and you're down $400. Then you come in on Friday and you trade a stock like HKD and you make $500. Now, these are just simple numbers so I don't screw up the math in my head. Making $500 on a trade like HKD is very achievable with almost any account size. It's very achievable. Now, you have a 20% win rate on the week, but you're green. Now, none of us are here to make $100 a week. That's not our goal. I keep the numbers small and simple to make a point. But the point is, you have now went an entire week with a 20% win rate, but you're green. And as a new trader, that is your number one goal. Your number one goal as a new trader is not to retire. It's not to buy a Lambo. It's not to travel the world. It's not to buy a mansion. Your number one goal as a new trader is to stay alive. And by finishing that week green, you live to fight another day. Hopefully you've journaled. Hopefully you've tracked all your data over that week. You've gotten a little bit better. So now you finish the week up a little bit, and you also learned and grew along the way. You built some pattern recognition. You learned a few things. Now it's only if you're journaling and doing all the stuff that I talk about. So now you're getting better and you're up on the week. Now let's think about the flip side of the rule of 5. If you lose $1,000 on Monday and $500 on Tuesday and $400 on Wednesday, well, now you've sunk yourself. Like you're dead man walking at that point. Because the only way to get back to break even after breaking stop losses and taking bigger losses than you planned on is to aim for the fences, which means you blow up your account, you're dead and buried, you're over, you quit because you simply couldn't respect the rule of 5 and understand that the only way to survive in this game, the only way to be trading 22 years later like I have, is by having a plan, following that plan, and executing on that. If you're making excuses, if you're refusing to look at the stock because you can't cut it, well, that turns into big losses, which then creates the home run mentality, which creates blown up accounts. If you go into tomorrow knowing the rule of 5, knowing that the only way to be successful at this is to follow your plan and cut your losses, then you can get to the end of the week. And like I said, it ain't hard to make $500 on a stock like HKD in one day, put you back green, and you live to fight another week. And you got smarter, you got better, you learned along the way. So there you go, my friends. So the point is, trading with no plan, going to end badly. Not thinking about your stop loss before you enter, going to end badly. If you're ever thinking about how much you could make before you think about how much you're going to lose, you're in for a rough run. Every trade I enter, I assume I'm going to lose. I have the mindset that I'm going to lose. Now, every trade, based on the chart In the position size, I know going in what my downside is. That's what most people don't do. They don't do that. They think about what if this, how much I could make, buy the new motorcycle, buy the yacht. The one thing you can control in trading, the only thing you can control is how much you lose. It's the one thing you can control. And I'll end with this point. Every big loss started out as a small one. Write that down. I got to run. I didn't realize it was almost 8 o'clock. Thank you, my friends, for being here. Write that down. Every big loss started out as a small one, and you could have sold. Now, if you're making excuses and blaming other things, different, you need to fix that. But every $1,000 loss started out as a $100 loss. Every $10,000 loss started out as a $100 loss. So you can fight it if you want, but it's just the reality. Own your decisions. Always have a plan. Follow that plan. Build discipline, and you will be rewarded over time. Do random stuff, trade without stop losses, have no plan. It's the definition of insanity. The definition of insanity is doing the same thing over and over again and expecting different results. And that's what most people do. They do the same thing over and over and over again, and expect different results. You can change that tonight. You can literally change all of these things tonight. So, all right. Have a great night, my friends. And we will see you next time.